Session 5 is how to make your investments tax-free. So I'm going to talk about stocks and shares ISA and the self-invested personal pension, also known as a SIPP. And this is really key because when it comes to UK, they actually help investors a lot. People investing in the stock market do benefit greatly because UK is known as one of the world's financial centers. Right, so firstly, stocks and shares ISA. And ISA stands for individual savings account. Now, the UK give you allowance of £20,000 per year. So this is for year 2022 to 2023. It may change next year, but unlikely. So what that means, you can put £20,000 into your account and invest it. Now, let's say that £20,000 goes to £50,000. That £30,000 you made is going to be completely tax-free. There's no capital gains tax, there's no income tax. If you were to do it in a non-ISA account, the £30,000, a portion of that you would have to pay capital gains tax or income tax, depends on your situation. And you're only allowed one ISA per year. You can make unlimited amount. If you invested £20,000 and you went to 2 million, all that 2 million or the profit that you made from that 2 million is completely tax-free. So this is the massive benefit from an ISA. I would recommend, if you're going with free trade or trading 212, to put it straight into an ISA account because it's your tax-free wrapper that the government have legalized. Next is the SIPP, the self-invested personal pension. So this is your own personal pension plan that you are doing yourself. If you're putting money into a pension, they are investing it in other places. You don't know where that money is going. Okay, you're just hoping to see it when you retire. So there is tax relief on this, which we'll talk about, and I'll go through a couple of examples. You have an annual allowance of £40,000, which is really good. However, there are some conditions because this is a personal pension plan. It can only be taken at 55. After 2008 is 57. And then what they're going to do is 10 years before your normal retirement pension age. And another good thing is 25% can be taken as a lump sum tax-free when you retire. That is when you're at 55, 57, 58, whatever that age that may be. Now, the key benefit is the tax relief. So tax relief on a 12,500 contribution to SIPP. If you're a basic rate payer, so if you earn a wage and you pay 20% income tax, you've contributed £10,000. The government will give a contribution of 20%. So they'll top up £2,500 on that. Okay. So your tax relief is £2,500. So you've got a total of £12,500. If you are a higher rate taxpayer, and if you're not sure, these are the bands. So if you earn more than £50,000, you are pretty much a 40% higher rate taxpayer. So you can put in £10,000. The government will contribute £2,500. You can claim back another £2,500. So you get a total tax relief of £5,000. So in total, you've just put in £7,500 and you got £5,000 back from the government. And if you're an additional rate payer, so you're earning more than 150k, you get even more. For a £12,500 contribution, you just had to put in £6,875. A lot of people don't know this. As I say, the UK always does help the rich. It never helps the poor, it always helps the rich. And remember, if you're doing this, you can put it into a S&P 500 index fund, get the annualized return of 16.54%, or if you want a very, very conservative number of 11%, and the government is giving you 20, 40, or 45% back. I hope these sessions helped for investing for beginners. Leave a comment if you're unsure about anything or drop me an email.